Every month, millions of UK seniors quietly watch prices rise while their income stays frozen, never realising that hundreds of pounds meant for them are slipping away. Not because they did anything wrong, but because the system is complicated, badly explained, and full of support that nobody clearly points out. From hidden top-ups on pensions to energy discounts, council tax cuts, and free healthcare help, the money is already there. It just isn't reaching the people who earned it. If you're over state pension age, this video could be the moment your finances finally start fighting back for you. Number 1. Unclaimed pension credit. Many UK seniors are losing hundreds of pounds every single month simply because they haven't checked whether they qualify for pension credit. More than 880,000 seniors across the UK are still eligible but not receiving it. Pension credit is not the same as a state pension. It is an additional benefit designed to top up low income for people over state pension age. Most people who miss out wrongly assume their income is too high or that owning a home cancels eligibility. The reality is that even seniors with savings, pensions, or property can still qualify, and the average successful claimant receives £207 per month, with some getting even more depending on circumstances. The most surprising part is how pension credit unlocks other financial advantages automatically. Once approved, seniors can access free NHS dental, free prescriptions in some regions, council tax reductions, warm home discount, housing benefit support, and a free TV licence if over 75. Many people spend years paying full price for everyday essentials like energy bills and medical costs because they never activated the benefit that opens the door to these savings. It takes only about 15 minutes to check eligibility through a phone call or online form, and the payout can be backdated for up to 3 months, meaning missed money can still be recovered. If you're over the state pension age and your weekly income is below the qualifying level, checking eligibility could stop monthly financial loss immediately. Even if you live with a partner, you might still qualify depending on combined income. Whether you currently receive a pension, disability benefit, or work part-time, it is still worth verifying. Number 2. Missing winter fuel and cold weather payments. Every winter, thousands of seniors lose money without realising it because their winter fuel payment and cold weather payment are not activated, even though they qualify. These payments are designed to support heating costs during the colder months, especially for people over the state pension age or with disabilities. Many seniors think they need to apply every year, but once eligibility is confirmed, the winter fuel payment should arrive automatically. The payment ranges from £250 to £600, depending on age and household situation, while cold weather payments provide £25 per qualifying week of severe cold in some regions. The unfortunate reality is that many eligible seniors never receive this support, simply because their benefit status is not linked correctly to government systems. A common reason for missed support is that the government has no updated record of a qualifying benefit, like pension credit, housing benefit, or attendance allowance, even though the senior is receiving it. When the link is missing, the system does not trigger winter support payments. Seniors living alone or managing health issues are affected the most. Another issue is that seniors who recently moved, changed bank accounts, or reached the qualifying age may not receive the payment unless updated information is shared. There is also a growing number of seniors who believe that owning a home or having savings disqualifies them, which is not true for winter fuel payments. Checking status takes only minutes, and once confirmed, payments are issued automatically each winter, without the need for repeated applications. Households can also request a backdated review if payments were missed. Anyone who is over state pension age or receives a qualifying disability or low income benefit should contact the relevant helpline to activate support. Number 3. Overpaying for council tax. Many UK seniors pay far more council tax than necessary because their homes are placed in the wrong tax band, which has become surprisingly common due to outdated valuations from the early 1990s. Seniors living alone or on a low income are also missing out on council tax reduction, which can decrease monthly bills dramatically. A large portion of homeowners assume their tax bill is fixed for life, even though thousands have successfully challenged their band and recovered years of overpayments. If a neighbour with a similar property pays less than you, this is an immediate sign worth checking, because the difference can amount to £40 to £180 every month. Another reason seniors lose money is lack of awareness about discounts for single occupants, disability adaptations, and low-income households. Many believe reductions only apply to renters or benefit claimants, yet homeowners can qualify too. Some seniors with medical conditions requiring additional rooms or space for equipment can request a disability reduction, lowering their bill permanently. Others who receive pension credit or have low income are entitled to significant monthly reductions without changing their tax band. Many local councils offer backdated refunds if a senior qualified earlier but never applied, and these repayments can reach thousands of pounds depending on duration and overpayment. The full process is simpler than most people expect. A council tax band review can be requested online and does not require legal support or surveyors. If the valuation is corrected, the refund is issued directly to the senior's bank account, and the new lower payment begins automatically. Seniors can also apply for council tax reduction through their local council website, and approval can unlock future savings instantly. Number 4. Not using NHS low-income and free prescription schemes. Many seniors across the UK are spending a large portion of their income on medical expenses because they are unaware of the NHS low-income scheme, which can eliminate most, and in many cases all, healthcare costs. Seniors on a fixed income often believe they are automatically disqualified if they receive a state pension, own property, or have savings. Yet the system focuses on monthly income after essential expenses, making far more people eligible than expected. The HC2 certificate is the highest level of support and covers free prescriptions, free dental treatment, free eye tests, free glasses vouchers, free wigs or fabric supports, and full reimbursement for travel to medical appointments. Many seniors also miss out on refunds for payments already made because they never knew these benefits existed. Another common misunderstanding is that the scheme only supports those with severe illnesses or disabilities, but eligibility can apply even for seniors managing everyday age-related health needs. Regular prescriptions for blood pressure, diabetes, cholesterol, and arthritis can easily cost £40 to £90 each month, and essential dental care or eye exams add more financial pressure. A growing number of seniors are paying full price for treatments, while others living on the same income receive everything free simply because they applied. The government also offers a prepayment refund system, allowing money spent on prescriptions before approval to be reclaimed if receipts are provided. The entire process can be completed online or by post, and approval usually lasts for 12 months before renewal. The application only takes a short time to complete and asks about income, housing costs, and other basic expenses. Many seniors are pleasantly surprised to qualify for full medical support after assuming their income was too high. Those who do not meet the threshold for the HC2 certificate may still receive partial help through the HC3 certificate, reducing medical expenses every month. Number 5. Not claiming attendance allowance. Thousands of seniors who struggle with day-to-day tasks are losing money every month because they don't realise they qualify for attendance allowance, a benefit designed to support people over state pension age who need help with personal care. Many believe it only applies to those who have a full-time carer or are completely dependent, but the rules are much broader. If conditions like arthritis, heart issues, chronic pain, memory problems, low mobility, breathing difficulties, or other health challenges cause difficulty during the day or night, eligibility may apply. Attendance allowance is paid in 2 monthly rates and can add up to £434 every month, making it one of the most valuable benefits seniors overlook. A major cause of missed payments is that seniors tend to underplay how much support they need because they don't want to appear dependent. The government does not require a diagnosis or a doctor to confirm that a senior needs hands-on care. The assessment is based on how health conditions affect daily life. Even if someone has developed personal systems to cope alone, such as leaning on furniture to move around, sitting down to wash, needing reminders to take medication, or waking up during the night due to pain, this can still count as a need for support. Many seniors who applied without expecting approval were surprised to receive payments because they finally described their real daily challenges instead of focusing on independence. The application can be completed over the phone or by form, and successful claimants receive payments every 4 weeks. Approval also opens the door to additional financial support, such as extra pension credit elements and higher housing benefit. Payment does not reduce state pension or other benefits. Attendance allowance is meant to support dignity, comfort, and independence by easing financial pressure caused by health problems. Number 6. Paying full TV license when exemption applies. Many seniors are paying the full TV license fee every month, even though they qualify for a completely free license. The rule is simple but widely misunderstood. Anyone aged 75 or over who receives pension credit is entitled to a free TV license funded by the government. Thousands of seniors mistakenly continue paying because they don't realize the free license is not issued automatically. Banks continue to collect monthly direct debits until the senior personally submits proof of entitlement. Even people who received pension credit after turning 75 are still eligible, and payments already made can be refunded. This error leads to unnecessary financial losses each month, especially for those on low income who rely heavily on television for information and entertainment. A common reason seniors miss out is the assumption that being over 75 alone provides the exemption. The rule changed recently, so only those who are over 75 and receive pension credit qualify. Many seniors wrongly believe that savings, property ownership, or having a private pension disqualifies them from pension credit, so they never apply and end up paying full price for a service that could be free. Another cause is failing to update the BBC licensing system when a senior begins receiving pension credit. When this connection is missing, the system continues charging even if the senior meets all requirements. Many households continue paying simply because they don't know how to cancel or because payments are hidden among other bills. The fix is quick and straightforward. Once proof of pension credit is submitted through the TV licensing helpline or website, charges stop immediately, and any overpaid amount can be refunded directly to a bank account. It is also possible to request refunds for previous years if entitlement existed but was never activated. The process does not require legal help, and support is available for seniors who prefer phone applications rather than online forms. Number 7. Missing housing benefit and mortgage support. Many seniors in the UK are covering rent or mortgage interest entirely from their pension, even though they qualify for financial help every month. Housing benefit supports renters on low income, while support for mortgage interest helps homeowners by covering part of interest payments on qualifying loans. Many people miss out because they assume receiving a pension disqualifies them. But eligibility depends on income rather than age, savings, or home ownership. Both forms of support can drastically reduce monthly living costs. Applying for these schemes is often avoided because many seniors believe the process is complicated or lengthy. Yet most applications take less than 30 minutes and require only basic financial information. Housing benefit payments usually go directly toward rent, which means tenants immediately feel relief without renegotiating agreements with landlords. For homeowners, support for mortgage interest contributes to interest costs every 4 weeks, reducing pressure on limited retirement income. Seniors who qualified months ago but never applied can ask for backdated help, and councils frequently approve support once eligibility is confirmed officially online. Many seniors already receiving pension credit or disability benefits easily qualify for housing benefit or support for mortgage interest, but payments are not triggered automatically without submitting an application, causing ongoing financial loss month after month. Eligibility also applies to seniors renting privately or living with family, depending on combined income and medical needs. Some councils provide extra help during colder seasons when energy costs rise, reducing pressure on tight budgets and protecting long-term financial stability for people living on fixed pensions or limited savings. Number 8. Overpaying for broadband, mobile and utility bills. A large number of UK seniors are paying full price for broadband, mobile phone plans and gas and electricity, even though they qualify for social tariffs, which are discounted plans created specifically for low-income households. These tariffs can cut broadband and mobile bills to £10 to £20 a month, often with no price increases for the entire contract period. Many seniors don't know these plans exist because providers rarely advertise them, and comparison websites usually don't display them. Even seniors who already receive pension credit, attendance allowance, or housing benefit must request a switch manually. Otherwise, they stay on expensive standard prices and lose money every month without realizing it. Social tariffs are available from major providers including BT, Sky, Virgin, Vodafone, and O2, and switching does not require changing phone numbers or broadband equipment. Energy suppliers also offer support tariffs and priority schemes for eligible seniors, reducing monthly bills significantly during high-cost seasons. Many seniors think switching tariffs will be stressful or involve long technical changes, but most providers handle the switch automatically once eligibility is confirmed. People paying by traditional direct debit or paper billing often pay more than necessary and can save money instantly by converting to discounted rates, protected from mid-contract increases. Seniors who depend on broadband to manage health appointments, banking, medication reminders, and communication with family benefit the most. Yet, they are often unaware that they can cut costs without reducing usage. Requesting a social tariff takes only a few minutes over the phone or through a provider's website. No credit checks or cancellation fees apply, and switching will not affect existing service quality. Even seniors living with family members may still qualify if someone in the household receives a qualifying benefit. Improved customers remain protected from price rises for the full duration of the discounted contract and can renew when it ends. Number 9. Unclaimed carers benefits. Many seniors lose money every month because they don't realise they qualify for carers allowance or carers element, even when they are caring for a spouse, partner, relative, or friend. A person does not need to be a professional caregiver to qualify. Simply helping someone for 35 hours a week or more with tasks such as washing, dressing, preparing meals, medication reminders, mobility support, emotional reassurance, or nighttime assistance can count. The cared-for person does not need to receive attendance allowance to trigger eligibility because other health-related benefits also qualify. Seniors often miss out because they see caregiving as a natural part of their relationship and never label it as care. Yet the government recognises this unpaid support and provides up to £358 every month to reduce financial pressure. Another reason benefits go unclaimed is the widespread belief that carer's allowance reduces the state pension. In reality, while the two payments can't be counted twice for the same purpose, seniors receiving a pension can still qualify through the carer's element of pension credit, which increases household income without replacing anything they already receive. This uplift can unlock additional support too, including higher housing benefit payments, council tax reductions, and warm home discount eligibility. Many people caring for a loved one with dementia, chronic pain, COPD, arthritis, mobility challenges, stroke recovery, or mental health difficulties are entitled to financial support but never apply because they feel they are just helping or don't view themselves as carers. Applying is straightforward and does not require proof of professional training or medical certificates. Officials look at the impact of the health condition rather than whether the person appears independent in public. Support is paid every 4 weeks and can also be backdated if the caring role began earlier. Payments do not require moving the cared-for person into a different system or changing GP or hospital arrangements. Number 10. Not claiming warm home discount and local grants. Thousands of seniors across the UK are missing out on warm home discount and local energy grants, even though these schemes were created specifically to reduce heating bills for low-income and vulnerable households. The warm home discount provides a one-off annual payment of £150, automatically deducted from electricity bills for eligible customers. Yet many seniors do not receive it because their energy supplier has not been updated with their latest benefit information. People who receive pension credit, housing benefit, or a disability-related benefit often qualify without needing a separate application, but payment is not triggered unless the system recognises their entitlement. Local councils also provide additional fuel grants, emergency winter funds, and home insulation support. Yet many seniors never apply because they assume these resources are limited or unavailable in their area. Another reason seniors lose money is misunderstanding eligibility when living with family or renting privately. Warm home discount does not require the customer to live alone or have the bill in their own name. Eligibility depends on the household receiving a qualifying benefit and notifying the correct supplier. Local grants also support homeowners, private renters, and social housing tenants based on income and health-related needs. Many seniors struggling with high winter bills believe there are no solutions beyond budgeting or limiting heating. Yet councils, charities, and energy suppliers have set aside funds specifically to protect people living on a fixed income. Some areas offer £200 to £600 in extra fuel support, but applications remain low because seniors simply do not know these programs exist. The process to receive help is straightforward. Seniors can call their energy supplier or check their website to activate the warm home discount and ask about extra grants. Councils list available funding online, and applications typically take only minutes. These payments do not need to be repaid and do not affect other benefits. CTA. Contact your energy supplier today and request the warm home discount and local fuel support to reduce winter bills immediately. Many seniors spend their retirement believing that rising living costs are simply unavoidable, when in reality, the support already exists to ease the pressure. The biggest problem isn't lack of benefits, it's lack of awareness. Month after month, money that could be helping with heating, rent, prescriptions, food, and day-to-day essentials never reaches the people it was designed for. The solutions are not complicated or technical. Most take only a few minutes to activate, yet they can transform monthly finances for anyone living on a fixed income. Whether it's pension credit unlocking extra support, attendance allowance easing health-related expenses, or social tariffs reducing broadband and utility bills, every step protects your financial independence. If you're over the state pension age, or you care for someone who is, a single phone call or online check could stop significant financial loss immediately. Small actions create meaningful change, and every benefit you unlock strengthens your stability through the months and years ahead. You worked hard for decades, and the support available now is part of the security you earned. If this video helped you, hit the like button, subscribe for more important updates, and comment below with the benefit you plan to check first. Your experience may help another senior save money too.